Good evening, Strategic Alpha community members. Let me just check the mic once again. Okay, my voice is very clear. So I can see 45 participants have joined. Okay, so let us move forward. So hope you all are doing well and super excited for this today's session. Please comment in the comment as SE in the comment box. Let me understand if you are excited to learn about copper miners. We had discussed about gold miners and silver miners in past. Now the time has come to discuss about copper miners. So this will be a 1 hour session, and in the first 30 minutes, I'll be discussing about copper and copper miners. Then I'll be taking you uh, through the team of Stockal. Stockal team, is it here? Please comment in the comment box. If you are there, please raise your hands. I'll uh, make you the panelist. Vinaya, yeah, okay. So I made you co-host Vinaya. Who is there from your team, Vinaya? Rohan Pillai?
Thanks, Suyog. Yes, Rohan is from my team, so he will be taking you through the demo and how is it beneficial for everyone to invest in US markets.
Yeah. Okay. So Vinaya, what we'll be doing is first I'll be talking about the thesis on copper. Then I'll be talking about the thesis on copper miners. Then you at the end you can show the demo how can one invest in US markets through Stockal platform. Yeah.
Done, Suyog. Sounds great. Yes.
Yeah. So, good evening, everyone. I welcome you all to yet another super interesting session. In this today's session, as I said, that we'll be discussing about copper. So, copper, we are in a commodity bull run, which hope everyone is able to see the screen. We are in a commodity bull run since March 2024. And we discussed about the commodity bull run that at first the commodity bull runs are always started by gold, then it enters into silver, then it also enters into other commodities. So it has the gold, we have seen that big bull run happening from March 2024 till today. Gold is already up 65%. Now then we talked about silver. Silver is already up 40% since we discussed. Now what has happened is slowly and steadily, because as gold has crossed 3,500 USD, which was a very important key level, what will happen is now the commodity bull run will also enter copper. So the talk of today, the discussion of today is commodity bull run. Copper is the new oil. So we'll be discussing about that. So let us move forward. So before going forward, let me just share this important disclaimer. Strategic Alpha and Suyog Dhawan are not SEBI registered investment advisors. Whatever the discussions which will be done today, it is purely from an educational purpose and should not be constructed as financial or investment advice. Viewers are encouraged to conduct their own research or consult with SEBI registered professional before making investment decisions. So this is a standard disclaimer which I would like to give. Now let us move forward with copper. So why copper? First, let us understand about the copper production. So all in all, in the whole scheme of things, the copper production, these are the countries which produce the most of the copper. Most of the copper, around 19% of global copper production happens from Chile. Then 12% happens from Peru. 10% happens from Australia. 8% is from DR Congo. 8% is from Russia. And other small countries contribute to around 23%. So the majority production happens in Chile. Now, if I look at the total copper consumption, so where does the entire consumption goes in the world? So building and construction accounts to around 48% of the total consumption which happens, and 24% goes into engineering, 17% goes into electrical, 17% goes into electrical, 7% in transport, and 4% in others. Now, if I look at country-wise demand share from for all the total copper demand which happens, 59% of the copper is consumed by China itself. So China is a big player in copper consumption, and which we can't ignore. So China is leading consumer of copper. Then there comes United States 6%, Germany 4%, Japan 3%, South Korea 2%, and rest of the world 26%. So this is about copper production, refined copper consumption pattern, and along with demand share. Now let us look at the demand supply dynamics. So the current demand snapshot in 2024, global refined copper demand reached approximately 27 million tons, and projection estimate to around 33 million tons by 2035, and further to around 37 million tons by 2050. Demand growth in 2025 alone is forecasted at around 2% year on year, and driving the surge, electrification, renewable energy, infrastructure, solar and wind, and booming sector like AI data centers, all of which are copper intensive. There are some agencies which are also projecting the copper demand at around 5%. Some are also projecting copper demand at around 4%. But we will look at the data for next 4 or 5 years. The copper demand is projected to around anywhere between rough estimates around 4 to 5%, which is twice higher than what was past. So until now, in past 75 years, the total copper demand has been hovering at around 2.5% to 3%. Now let us look at copper supply landscape. So global copper production in 2024 was in the ballpark of around 22.8 and 22.9 million tons. In 2025, mine output is expected to increase by around 2.3%, while the refined output may jump to nearly 3%, largely driven by China's ramped up smelting capacity. Now, despite the increased production and inventories have dropped dramatically. So exchange stock levels have gone down to 40%, 44%, gone down by 44% since February 2025. And it is now covering just 6 days of global demand. So in world has only 6 days of global demand compared to the average which was there around 12 days. So reports show a brief cathode supply deficit of 38,000 tons in April 2025. Stark reversal from a surplus from just a month prior. And the source for this research is RAS Capital Research Analyst. So if I look at 4 major copper producers and their geographies, so Freeport has around 5 mines in USA and two in Mexico, and this is the production. So these are all the producers. You can see BHP, Glencore, Anglo American. So these are all the producers. So in Canada and USA, Chile, some part of Africa, and then some part of Indonesia and some part of Australia. So the producers are based at these places. Now, why the demand is growing? So why I'm saying that copper is the new oil, it is because of energy transition. So as the energy is transitioning from non-renewable to renewable, and renewable energy requires more of copper demand, and along with that, electric vehicle and overall energy transition, all that what is happening, it requires a lot of copper demand. So along with that, what is happening is copper energy transition demand is outpacing the other demand. So energy transition share, which you can see now, before in 2022, it was close to just 25%. But as we reach towards 2050, as the energy transition will also take some time. It cannot happen overnight. And overall the share from total energy transition will be upwards 50%. So this is where the tailwinds are there from energy transition, and energy transition is a big development going all around the world. Most of the investors are focusing on energy transition. Even if you have seen that most of the investors in India also are focusing on energy transition theme. So that theme itself over the next 25 years will be a big demand driver for copper. Now we saw about the demand. Now let us look at the supply also. So from a supply perspective, even though the total supply is also increasing along with the demand, but the problem with supply is increasing share of copper supply growing supply growth is coming from lower quality mining jurisdictions. Now, what is lower quality mining jurisdictions? Is see what is meant by, let us understand first what is meant by high quality mining jurisdictions. So high quality mining jurisdictions are the countries where you will not see any troubles, geopolitical tensions in the country, no political instability, and such safe countries where mining and all that cannot be halted and will not be halted. So the share from such and these mining jurisdictions are called as high quality mining jurisdictions. Now, what are low quality mining jurisdictions? Now, low quality mining jurisdictions are the countries where there can be political instability at any point of time. There can be some geopolitical tensions because of which mining and all those activities can get halted, can get stopped. So what is happening is, if you can see this data, this is red dots, means this is tier 1 jurisdiction market share, which in 2000 it was upwards 55%. In 2022, tier 1 jurisdiction market share has dropped close to 35%. And as we go ahead in future, this is expected to go down further. What it means is there is a possibility of a supply shock coming, because, and we are already in a geopolitical tension. So what might happen is, if some country with lower quality jurisdiction gets into some kind of a geopolitical tension again, the mining activity can get halted, and because of which there can be a supply shock. And this is not a good sign for the supply, but it is good sign for the price, because if the supply gets halted, the global copper prices might increase. Now, if the copper prices gets increased because of this supply shock, whenever it happens, we don't know when it might happen or whether it will happen or not, but there is a high possibility and probability of happening that because we are moving towards that. So if it happens, if the copper prices go up, most of the miners, and we are not looking at any single copper company here. We are here going to talk about copper miners as a whole, as a theme. So there might be lot of miners. There might be some low quality jurisdictions also, but majority it will be a bunch of all those. So copper miners, when the copper prices goes up, their cost doesn't increase. One of the big positive with all the miners, not only copper miners, also with gold miners and silver miners, the biggest positive thing is the raw material prices are low, and biggest raw material for copper mining or any gold mining or silver mining is crude oil, and crude oil is fundamentally drifting downwards. On a fundamental note, crude is bearish and it is expected to remain bearish. So that way, what happens is there will be a two-pronged tailwinds for possible tailwinds. One tailwind is already there with the miners, is that crude prices remaining low. But let us say if supply shock happens, majority of the miners, big miners, I'm not talking about small mining companies, because in low jurisdiction there are small mining companies, and if you are focusing on large mining companies, which are obviously higher quality mining jurisdictions, they are well placed. They can be at a stage where if the copper prices rise, most of the top line will flow down to the bottom line. And that is the reason why we are discussing about copper miners. Now let us look at why I got interested in mining at first is because of this data. And not only copper miners, we have also already discussed about gold miners earlier. This was the same reason. I said that gold mining, when we discussed this in 18 months back about gold mining, it was the cheapest sector globally. Then silver miners were also one of the cheapest sector globally. Now copper miners are also not as cheap as gold miners, but yes, not as cheap as silver miners some 6-8 months back. But yes, still relatively much cheaper. But mining as a whole, mining industry, mining sector as a whole, compared to global equities, are trading at lifetime lows. This is ratio. If I look at mining market cap versus global market cap, and this is the ratio. Mining market cap, mining industry as a percentage of global equities is today trading at just 1%, which was in 2010 was at 3%. In 1980, it was at 6%. In 1960, it was close to 11%. So we're not talking about, yes, we are moving the US economy and China is also moving from an old economy to a new economy. But copper is a metal of new economy. It is not old economy. Yes, mining business can be a old economy business. And that is the reason which might be the reason why mining industry market cap compared to global GDP is at record lows. But for how long? Because if you have gone through my mean reversion mental model, you'll understand that mean reversion is imminent. And I'll discuss with you today why copper miners is at an inflection point and why that mean reversion can happen with the copper miners. So let us go forward and understand more about copper miners. So first of all, why I'm looking at copper miners or copper or any commodities. So it is because I'm fully convinced that dollar index or dollar is in a structural downtrend. And Mr. Nilkant Mishra of Axis Bank has already discussed about why Nilkant Mishra has also discussed, and we have also discussed about it in the commodity bull run session. If you have not gone through it, just go through it. Also, you can go through Bitcoin session where we have discussed the same case, why dollar domination is going down and why dollar de-dollarization is happening. So dollar index is structurally in downtrend. If you can see here, this is below 30-week moving average, which we track. Again, it is creating a lower top, lower bottom, lower top, lower bottom formation. It has already given a breakdown, a long breakdown, 3-year long breakdown, and it is trending downwards. So whenever dollar index is bearish, it creates a bull run in precious metals, emerging markets, because money flows out of US to precious metals and means people don't trust dollar more. So that is the reason why, and also commodities become cheaper. So when commodity becomes cheaper in other currencies, traders will also look to buy commodities, and that is the reason why commodity bull runs is inversely proportional to the dollar. If the dollar index goes down, commodity bull run happens usually. And we are in a structural dollar index downtrend. Now, compared to the dollar index, which is already in a structural downtrend, let us look at copper, where it is placed. Now, let us look at copper as we track always 30-week moving average. Copper prices are above 30-week moving average. This is copper prices on MCX. And I think once the copper prices goes above 922 in MCX, it can resume the uptrend. As of now, after the 7th April fall, it has been consolidating and copper is getting accumulated. But it is in the uptrend already as it is about 30-week moving average. And whenever it closes above 922, it will confirm the bullish breakout And I think the copper is at the same place where silver was in April or May 2025. April, May 2025. Because copper has not yet given the breakout. Silver has given the breakout. Now it is trading at an all-time high. Copper should follow as per the chronology of commodity bull run, which we have discussed. Now let us look at why I'm interested in copper miners in US is because of copper in US. So copper, this is ratio chart of copper in US markets divided by copper in India, Indian prices. So copper in US divided by copper, and I have converted that to USD, I means in dollar terms, Indian copper in dollar terms. So relatively, copper in US is cheaper than India. Roughly around just give me 1 minute. Copper in US is roughly cheaper by around 6 to 7% than India. And such cheap you'll not get again and again. Such cheapness, relative lower valuations, you are getting that in US. And why? Because there has been a lot of confusion because of tariffs. And because of that, copper went up also. But once again, it fell down. So copper relatively is undervalued in US compared to India. And that is why that creates an inflection point for me from a valuation standpoint for the commodity. I'm not even talking about the miners. The commodity itself in US is cheaper than India. Now let us look at LME copper prices. So LME copper prices, London Metal Exchange copper prices, it is trading at a asymmetry. We also discussed about such asymmetry in silver in April or March, April. And since then, what we have seen what has happened with silver. Now the similar pattern is emerging in London Metal Exchange on copper prices. So the please be aware whatever I'm discussing, it is we are discussing purely from an educational perspective. But you are a student of technical analysis, you can understand what this bullish breakout means. So if this bullish breakout, what it is looking like, it is looking like whenever the breakout happens above this zone, are the copper prices ready to touch around 14,000 from 9,000? You, that is a question to you. You can answer better if you're a student of technical analysis, but at least I am seeing that. Now let us look at copper miners. Now copper miners in US, there is a ETF called as COPX, COPX, and I'm tracking that. I'm copper miners ETF. So copper miners ETF, this is ratio chart of copper miners ETF versus Nifty 500. We saw a similar kind of a ratio chart in silver miners when we discussed that case. So similarly, if you can see from 10 years, it has been heavily underperforming the Nifty 500. And this is ratio chart of copper miners divided by Nifty 500 in dollar terms. So mean reversion is imminent. Some other day. So the risk reward in copper miners is much better than Indian markets. That is what this chart is saying. Now let us look at which copper miners. So I said copper miners, global X copper miners ETF is what I'm tracking. Global X copper miners ETF provides an exposure to a basket of global copper mining companies. COPEX captures both US listed and international miners, offering broad exposure to the copper mining value chain. So what are the companies which it owns? So first Quantum is 5.6%. So Lundin Mining Corporation is around 5.3%. Freeport-McMoRan is around 4.84%. So Antofagasta is around 4.83%. Glencore is around 4.7%. So this is like a equal weight, near to equal weight copper miners index ETF. And usually, you know what is the magic of equal weight indices. We have discussed that. Equal weight indices, whenever the theme works, equal weight indices do much better. And I'm not saying that this is exactly equal weight, but it is nearly equal weight. It is not that some company is 10%, some company is 2%. So you can see that you can go through the discussion on equal weight indices, which we have discussed. So country breakdown, country wise, if you see, this is not even US based it entirely. 35% is from Canada, 10% is from US, 9%, 10% is from China. So this is global copper miners ETF. It is not just US copper miners, global copper miners ETF. Now let us look at why I got interested in copper miners at this stage is because of this development on the charts. This is copper miners ETF versus Nifty 500 in dollar terms. And as you can see here, this is looking like a symmetrical triangle breakout. And it is placed at, it is a perfect asymmetry. And I think it is, as far as the entire analysis and assessment which goes, I think it is better placed than Indian markets. It is better placed than Indian markets. Now, some people might ask me that whether copper miners is also better than precious metal miners. So let us look at the ratio chart again. So if you're not understanding my ratio chart analysis, before that after this session, just go through that session, ratio charts, the conviction builder, where I have explained about what ratio charts means. You'll get that confidence. So the precious metal miners, usually this ratio bottoms at around 0.268. So which means that copper miners can underperform the precious metal miners. But what it means is precious metal miners for some point of time, might do better than copper miners. So the question, if you are asking that should I sell my precious metal miners and then enter into copper miners? No, this is not giving you that confidence, because precious metal miners can still do very well and copper miners can also start well, but later on, as this ratio touches here, that might be the perfect time to move out of precious metal miners and enter into copper miners. And please do not take this as a recommendation, but this is how I'm just telling you to how to think probabilistically. And at this point of time, precious metals are placed better than copper miners, but copper miners, the inflection point is there. As soon as this ratio touches here, the timing will come where you can move out of precious metal miners and move on and increase your copper miner bets. But as of now, copper miner is at an inflection point. Now let us look at copper miners versus precious metals. So is copper miners, earlier I discussed about copper miners versus precious metal miners. But now I'm discussing about copper miners versus precious metals. Now someone, see, best time to go bullish on precious metals was March 2024, not now. Because a lot of people are now going bullish on precious metal. No, this is a very bad idea. Because if someone is holding precious metals, it is good to add this point of time. But if I don't own precious metals at all, this is not a good time. Why? Because there are better assets than precious metals if I want to allocate more, if I want to allocate today. Why? Because if you look at copper miners versus precious metal miners, usually the ratio of copper miners versus precious metals, and precious metals, it is not just gold, it is gold plus silver, which means 50% gold and 50% silver. And compared to that portfolio, copper miners is placed better. Because if you see, whenever the ratio touches this zone, from there, copper miners does better than the precious metals. Precious metals I'm talking, not miners. So if someone asks me that is copper miners better than precious metals? Yes, copper miners is better than precious metals. But I will keep on holding my older precious metals miners. I will not freshly allocate to precious metals, but copper miners is placed better than precious metals. So if I am not allocated at all in precious metals, copper miners is what I should look at, because the ratio has bottomed out and the copper miners can do very well compared to precious metals. Now someone will say that that by but you are saying that global equities are 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 not at a good place. So let us talk about valuations then. Because what you need margin of safety. If you want to allocate in equities, you need margin of safety. So is there a margin of safety in copper miners? Because I am talking about general equities might do bad. But the thing, like as we have seen, that gold miners has done much better than S&P 500 and Nasdaq. It is done even better than Russell 2000, which is the best small cap index in recent performance. So such place where the commodity bull run starts, the stocks can do better. The stocks can do better than the general markets. Now let us look at, in the next slide we'll be discussing about that, the valuations, because in strategic alpha's FTVT framework we discuss about fundamentals, technicals, value and trigger. Fundamentally the sector is good. Fundamentals are good towards copper also. Fundamentals are good towards copper miners also. At a later stage we'll be discussing about that. Technicals will tell you when to buy, when to increase, when to reduce, when to exit. Value will tell you how much to buy, and triggers will help you prioritize between the bets. So I'll be talking about the entire FTVT thesis at a later stage, but let us go forward and understand the copper fundamentals. Before going towards copper fundamentals, let us look at copper miners have started outperforming the copper. So this is a chart of copper miners divided by copper. And this copper miners divided by copper ratio chart is making a 10-year high. It is making a 10-year high. Just look at this. What it means is 10-year high. What it means for you? Please comment in the box. Not even 10-year high. It is a 12-year high. Please comment in the comment box. What does it mean to you? Inflection point? Comment as IP. Comment as IP in the comment box if you think that this is an inflection point. A breakout after 10 to 12 years. It is like a Kumbhakaran. I say that Kumbhakaran pattern. Whenever the breakout happens after 10 to 12 years, it is usually a Kumbhakaran pattern. And we are seeing that Kumbhakaran pattern in copper miners versus copper. Now let us look at valuation metrics. Valuation metrics for copper miners. So copper miners price to book currently is at 1.49 and 1.57 times X. Price to earnings is around 19.4 times and 21 times. Dividend yield is around 1.53%. It is better than Nifty dividend yield because Nifty dividend yield has fallen to around 1%. So you are getting a dividend yield of 1.53%. And this is the price. It is trading at 51 USD in US, 51 to 52 USD. And let us compare with that with Indian miners. I'm not even talking about copper miners in India, but all Indian miners. So Vedanta is trading at 4.3 times. It is not copper miners. It is all other miners. So Vedanta is trading at 4.3 times. Hindustan Zinc is trading at 10 times. NMDC is trading at 2.2 times. GMDC is trading at 2.5 times. Sandur Magning is trading at 3 times. Ashapura Minechem is trading at 4.5 times. Nalco is trading at 2 times, which I actively cover. Can you also tell me about Hindustan Copper? Somebody comment in the comment box. What is the price to book of Hindustan Copper? Please check in the screener and please let me know. What is the price to book of Hindustan Copper? 9.2. Just see. Indian copper miner Hindustan Copper is trading at 9.2 times price to book. And you are getting the whole ETF. Somebody saying 5.6. Please check again. But it is, I know it is way cheaper. Copper miners in US is much cheaper than than US. You are getting the whole ETF, and it is not US, it is global copper miners ETF, versus somebody is saying that if I am bullish on copper, why should I not look at copper miners in India, which is in the copper? But you got the answer now. Huge relative undervaluation. Now let us look at copper miners versus S&P 500. Now let us say somebody is bullish on US markets. I'll say that look at copper miners, because if you are bullish on US markets, I said the same chart earlier also about silver miners. Silver miners compared to S&P 500, it was at an inflection point, and the similar thing is happening in copper miners now. So copper miners, just see the risk reward. Are you seeing a risk reward here? Great risk reward here. Comment as GRR, great risk reward. Please comment as GRR in the comment box. So this is what we are seeing in the copper miners right now at this point of time. GRR. Yeah. This is a great risk reward for me compared to US markets. Now let us go forward and understand what does the demand supply dynamics. One more thing which I missed earlier about the demand supply dynamics. So there is a possibility of shortage and long-term deficits, as silver was in deficit close to 20%. Similarly, there is expectation of 30% deficit in copper miners, in copper supply shortfall by 2035. So fundamentals are supporting at this point of time. In a FTVT analysis, copper fundamentals are great. Copper miners fundamentals are great. Valuations are great. Now let us look at the conclusion. Copper and copper miners are at an inflection point, with copper prices as both medium term and long term tailwinds from strong demands. There is a possibility of a supply shock as well from low quality mining jurisdictions. Copper miners are also placed from nicely from a FTVT perspective. Now let us look at FTVT. Fundamentals, as I discussed, they are strong for both metals and miners already. Technicals, a 13-year consolidation breakout outperforming compared to Nifty 500, also compared to S&P 500, and it has just started its outperformance against S&P 500 and Nifty 500 both. So valuation relatively undervalued compared to all other sectors as well as Indian miners. This is one of the cheapest sector in the world. Gold miners was the cheapest. It is not that as cheap like gold miners, but it is one of the cheapest sector in the world. And you have seen that market cap of mining companies is trading at what valuation compared to other equities. And from triggers perspective, just give me 1 minute. There is a noise. Let me cut down that noise. So from a valuation points, it is heavily undervalued. Now let us look at triggers. This is the most important thing in this entire why copper miners now is because of this reason. Because in a whole scheme of things of FTVT, fundamentals tells you what to buy, what not to buy. Technicals will tell you when to buy, when to reduce, when to increase, when to reduce, and all that. Valuations will tell you how much to buy, how much money should I put in. And triggers will help you prioritize between the bets. Now, triggers is telling me the same thing, that this should be the focus bet at this point of time because of this trigger. Now, as gold has given the breakout above 3,500 USD, gold is already in a bull run as until 2028. We have discussed about that in the precious metal session. Even in the commodity bull run session, if you have not gone through that, that video is available on YouTube. Just go through that. That will give you a confidence that why we are in a commodity bull run at least till 2030, precious metal bull run at least till 2028, 2029, and copper why it is starting now. The entire thesis we have discussed that. Now, as gold trades about 3,500 USD, what happens is gold is a God's own asset. Now, silver is also similar to gold. It is a precious metal. It has industrial uses also. It is also God's own asset. Whenever the people find gold expensive, they start buying silver. Now, most of the global central banks have started allocating silver in their in their portfolios, in their treasuries. Now, what happens is copper is like a poor man's asset. So usually when the central bankers will not buy copper, but traders, arbitrators, and some of the investors, common people will start looking at copper as the new oil, copper as the new gold. What will happen is, because there is people will think that gold, it is all about greater fool theory, understand. I've discussed about greater fool theory, and value is unlocked in the stocks, in the commodities, because of greater fool theory. Unless and until there is a greater fool buying it from you, the bull run cannot happen. So the greater fool theory will now enter into copper, and what happens is these fundamentals, which is distant fundamentals, which will make copper bullish, traders will start to price in now, and there is undervaluation already in copper. So when the trader starts pricing that scenario now, copper will give a breakout. When the copper will give a breakout about 922, and even in US, what will happen is copper miners will make more money. If copper miners will make more money because their cost doesn't increase, stock price will also shoot up. So as gold trades about 3,500 USD, traders will look to load up other commodity as well, and which can create a breakout in copper going ahead in short to medium term. Gold starts the bull run first, then silver enters, and it enters into coppers and other commodities. Now it's the time to for the copper to show its outperformance, and miners will follow. And miners are already outperforming the copper, which means miners are at a greater inflection point. So I'm interested in copper. Copper, I might be doing trading in MCX and all. But as an investment, I'm interested in copper miners, not copper. Copper cannot give you asymmetry. Miners can give you asymmetry, because if copper prices goes up 20-30%, miners can understand. You can understand. You have seen that in gold miners. So what can happen with copper miners? So copper miners is a obvious potential idea which qualifies the FTVT and a heads I win big, tails I don't lose much kind of a situation now. So with this, I conclude that I have completed the entire FTVT discussion on copper and copper miners, and hope you have found it useful. Now let us understand that copper miners in US, how to, if somebody wants to invest in copper miners in US, how do I do that? Because in Indian investing account, you cannot do that. You need to open a global investing account. And for the same reason, I have called Vinaya and Rohan from Stockal. So we have tied up with Stockal, which is a global investing platform. They are now doing in US, and sooner they will also enter into other markets. So with this, I conclude that I have completed the today's discussion, and we will move towards the next topic of the discussion, which is how to invest in US or in globally anywhere, Japan or any country,